Hi, in this video, you'll learn about what are called bases or resistance. We'll cover how to spot bases and resistance and how you can trade off those and I use this for my own swing trades that I do. And I'll share with you how once you spot this and once you learn how to read charts this way, you can really make some great trades on things that are dipping or going below what are called resistance or bases in a chart. So first up, let's jump in, and I should say that a lot of what I'll talk about here I've read in books, I've watched in videos, and wish I could cite all the people and all the books that I've read, but I really mash it all up and kind of I'll probably borrow some terminology and everything else. It's not intentional. I'm just really sharing what I've learned and how I trade. So a lot of that has been learned from other people. So if I use a phrase that someone else uses or an analogy, I try to cite that, but if I'm not trying to steal it intentionally or take it intentionally. So first up, the first thing, and I always mention this to a lot of new traders or people that I even work with to train or coach, is that it's so important to look at the full chart when you can. It doesn't matter what asset. Right now we're looking at BQX, BTC. Now I traded that today, and I'll talk about that trade and everything else. But look, I just changed the candles. We were looking at 1 hour candles here, right? I just changed it to 4 hours. If you start doing this, you're going to have such a leg up comparatively to other investors. Now, I don't know what percentage, but I know a larger percentage just because many of them don't take the time to look at the full chart. And when you look at the full chart, this is telling you, and this is what this represents, and this is why it's so important. This is telling you what a group of people, buyers and sellers, have come together and tried to figure out what the price of something is. That's what they're telling you. That's what this is. This is a representation of the history of that. Okay? So it's so important to be able to kind of have that full picture in your mind. I liken this to a boxing match. I used to watch a lot of boxing. I don't so much anymore. But one of the things I really liked in boxing, and you could look at it the same way here, is that let's say that we have the red boxer and we have the green boxer, right? So two boxers get in a ring and they start trading punches. And there's a time in the fight where one boxer will land a punch on another boxer, and that boxer that just got that punch maybe is hurt a little bit. Or maybe that punch, there's a little bit more power than that boxer thought the other boxer had, right? And that boxer will react. And usually if he's hurt, that's where you start to see the heart, right? That's where you start to see what they're really made of. And they usually they fight back harder, and that's where the fights usually turn. Usually that happens. And you're looking for the same type of thing in the charts that you're looking to trade. You're looking for a point in time where the buyers and sellers fought over price. They fought over what the price of whatever it is, and it doesn't even matter what the price is. It doesn't matter. I don't care what the news is. It doesn't matter. And you're looking for a time where the actual buyers fought back in such a veracity that they just beat the heck out of the actual sellers. That's really what you're looking for. You're looking for those times in the chart. So we can say right here, right? If we go back and remember, we're looking at 4 hour candles. That means that each one of these actions make up 4 hours of price action. You could say right here, this time right here, we scroll in. This time right here, this 4 hour time frame, the sellers really got beat up. I mean, the buyers basically said, I don't know what you're thinking, but this thing is worth way more, right? So this here is a big reaction by the actual buyers, right? You'll see that the sellers actually reacted as well, right? Now, what happens is that usually then they start to kind of agree on a price, okay? So they agreed on kind of a price. And we can say, well, right here is kind of where they agreed on that price, right? Now, look what happened here when it went below where they kind of had that agreement, where they kind of had that, is that once again, the buyers really reacted and got pissed again, right? They got mad, they got punched in the face, and they weren't happy about it, right? So you could reason basically from this that if I buy below this, the buyers are going to be on my side, right? And for the most part, you'd be kind of right here. The problem with bases, and this is why you have to kind of redraw them or relook at them, is that they change constantly, right? And the best way to kind of describe this is let's go to the 1 hour time frame. And let me do this. And I'll talk about my trades that I did today. And, today's a little bit different because Bitcoin is trying to reach 6,500, and it's trying to go back down to that, and it's really fighting back and everything else. So here's what I did, and hopefully this will be clear. So here, let's delete this. If you look at BQX right here, you could say that this was a resistance point, this was a base, right? Because look what happened. It got below this and the buyers really reacted, right? So previously you could have said that if I buy below this point here, right around here, the buyers are going to react. And they're going to typically, buyers overreact. Typically that's what happens. Because what happens, and it's in real time, but what happens is that it crosses this point and people start getting worried, and then they get a little bit more worried, and then they get even more worried, and then suddenly it turns magically, and then as it rides up, people that always wanted it or anything else, they're going to try to ride that wave, and then they're going to keep riding it up, so they typically overreact. And then what that does is it creates a new base. So you'll see here, and then it created a new base. Now this is a very weak base. Very, very weak. It's only been tested twice, right? But you could say, so that's why when it comes back below this base, you kind of have to be mindful of where are you at in the overall chart. Are we at an all-time high? Not really. What's happening in the market? We have to be mindful of all those things. What's happened with this asset? So you could say, though, if you bought below this base before we got here and you were very careful with your profits, you weren't looking to kind of like get into the 15-20%, that you would, if you bought here below this, you could have made 6% or so, right? To be safe. Now, what happened today is a good illustration of why, it's kind of important to kind of look at your bases and realize that these two bases have been previously cracked. So when everything was tanking today and people were freaking out and I bought 20 or so things, I drew this as a base, and I didn't really draw. I looked at that and I said, well, if it crosses this price point, right? 36040 Satoshis, then I'm going to buy. Okay? It to me looks like a good buy. And what I did is I purchased right here, and then I purchased another position right here. And then I got pretty lucky, I'd say, with a purchase, is I bought right at the tail end. So right there, just before it turned. I don't try to time these things. When it starts doing this, I kind of take a little bit of a position here, and then I take a little bit more, and then the further it goes down, kind of the more, this is where, like, as it goes further down and you're adding to your position, most people would freak out. And I did the first couple months I did that. I freaked out, honestly, but then I've learned to emotionally unattach myself from these things and just, I can't say trust, but believe in my analysis and that the market and it doesn't matter, the one thing that I'm always looking for is, are there people willing to buy this thing? And when they get punched in the face, do they fight back even harder? And what happened here? They fought back. Now they're currently, getting punched again because Bitcoin's getting punched again, and Bitcoin doesn't know what it wants to do. That's why you have to know what Bitcoin's doing at all times. But look what happened. The buyers really fought back, right? Now, they didn't fight back to this level. Now, they might over the course of, depends what happens with Bitcoin. So things are so much in the air right now. Now, they might go up here to 39, but I've cashed out most of my positions. So I cashed out of this position up here, I cashed out of the other position up here, And then the other position I cashed out below, well below this tick mark, well below this little this high. So because what I'm looking for when I cash out, I know I'm getting beyond bases here, is that when I look at and I look at and I see what's happening with Bitcoin, I see what's happening with this chart. We're already broke a base. We already broke these bases here. We broke this really weak base from a big bounce up. So this isn't really that strong, right? It hasn't been tested. It's been tested at a higher level, but it hasn't been tested at this level. So what I would expect to see now on this dip is that this base will be, this will still be the base, right? So it might dip here and then bounce up, right? It might hit here and bounce up. So it might even go beyond that if Bitcoin continues to if Bitcoin breaks 6,500, then it's going to go, and then this will be, well, what I'll do is I'll be very mindful of getting into a position here, right? So what I'll do is, because it's really broken very weak bases, this is how I would analyze this. First of all, I'm going to do something that a few investors, not few, but I haven't seen a lot of investors do, is that I'm going to go to the 4-hour chart and I'm going to look at 4-hour time frames, right? I'm going to think in larger time frames, and I'm going to think, okay, well, we're in free fall mode here, right? And you could say that this is a base here, right? This is the one that was just previously traded. But when you look and say, what is this thing worth? What does the chart tell me? I don't know. I mean, the chart tells me right now that this might be an argument because it bounced from here. So what I would do on the next, we're approaching it now, is if Bitcoin breaks 6,500 and this alt follows, I would take a little bit of a position here. And then I would take a little bit of a larger position here. And then if it goes down, if it does go down to here, I would take a large position here. So, the further it goes down, the larger I would scale out my positions. And you might say that that's crazy, but based on what I see here in this chart, there's buyers here. So let's say it does happen. Let's say this does happen. Of course, this is not even a calculated risk. This is a risk. All of this is risk, right? So let's say Bitcoin goes to 5,500 or 6,000 here, and it closes 6,000, and then this goes all the way down here, and I bought at these various positions here, okay? Let's say in the next day, Bitcoin shoots up 2,000 to 3,000, just shoots up, right? It could go down or it could go sideways, right? If it shoots up, this is going to shoot up high. It's going to shoot up like the 40 or 50% level, right? If Bitcoin goes down and it just kind of trades sideways, and then maybe it just, doesn't know what it wants to do, these are still going to, in my opinion, rise up, and they're going to retest this level. So, this one might be a risk. That's why a bigger risk, because that's why I take a lower position. And this is, keep in mind, this is a huge drop from where it's at. I mean, this would be 100%. So I'm over exaggerating my positions, right? I should say. But the problem with where we're at right now is that no one knows. When I say no one, other people looking to see what is the kind of historical price precedent of this asset, right? If I go to the 1-hour chart, 1-hour candles. Well, in this area here, you can't really say there's a historical precedent for the price, right? Here, at least you can kind of say along some of these lines that there's some kind of historical, that it's been tested multiple times and the buyers have reacted multiple times. I have no idea where the buyers are going to react here. I just know that the further it goes down, the more freaked out people get and the more people sell. So the further it goes down, the more that it's going to seem like a value to anybody that wants this, that anybody's wanted to pick it up, that anybody that is looking at it as an investment opportunity. That's just the psychology of this market, right? So that's where hopefully this explains bases. Let's look at another chart and just show you that this really plays out. Let's remove this. So we're looking at ZRX right now. I purchased ZRX as well. We're on 1 hour bars, and if we look at here, you can clearly say that this is a base, right? That's where the buyers really reacted. If you really want to draw this one, this is a pretty strong base, meaning that, look, it's been tested a lot of times, you know, this range, and then it jumped up, and then it didn't retest it again. So you could even say this is a light base. So see how if you buy in this dip here, if we scroll in, see if you bought here based on this base, you're you know, in the profit zone, right? When I say profit zone, you know, 6%, right? But you'll see as it broke this other base that you drew here, that was really strong. I would consider this a strong base because it's been tested a lot, right, in this chart. And if we go back, you know, it hasn't really, you can't say it's been tested more. But as we go back, you'll see once it broke that, it shoots up, right? It broke that, it shoots up. Now, it did that again, but you also have to keep in mind market conditions, okay? Look, this whole time frame, Bitcoin has been declining for I don't know how long, like 3 days, 4 days now, right? So you have to be mindful of where is Bitcoin at, because that's such a driver of a lot of these things, okay? So the reaction to bases and resistance and support is going to be much different when Bitcoin is like tanking. That's just something to keep in mind. Not to say you can't make money, you can. Or I guess you could say Satoshis or, you know, Bitcoin. Basically, that's what you're trading in here is Bitcoin. Not to say you can't, because I did. On this trade, I did. I mean, I entered 2 positions here, and then I cashed out, you know, probably right around 6% is where I cashed out. So, and let me draw that just so it's clear so you can kind of see. So what I was seeing, once again, is this was dipping and dipping, and as it was, I didn't even know where to draw a base. I was just like, okay, why, you know, because it already crossed this base, and I was like, well, do we look at this? Do we look at this? And I kind of used this right here, right where the price is at right now. I kind of used this as the kind of base here. I took the lowest of these, and I said, well, based on how I see the reaction here in this little time area, and then I looked at another time area, right? And I'm trying to make this clear, or clearer. I know it's hard with the chart bouncing around so much. Based on this time area, how the buyers reacted here, the volatility and the volatility here, right? I looked at that and I said, you know, well, if it gets below this base here, which is, you know, has a lot of testing, people will also be looking at this here. So I felt that I had another resistance zone here. So I looked at this and I said, well, here's another base. Keep in mind, I don't draw these things, so that's something to keep in mind. I can look at the chart now and just kind of do this, but as it was going down, right, and it broke this one base here. I wish there was like a setting I can just do. It broke this one base here. I bought here and I bought here, right here in the middle of this candle, and my reasoning was that, well, not my reasoning. Well, yeah, my reasoning is that, well, there's no real strong base here, but I traded this as a base here, as a price base, and then this is a price base, and even though it could have gone into free fall because no one knows what it's worth as everything's going down, right? And they're trying to find what it's worth. I looked at that and said, well, at least people are going to look at this base here, this price point, and it's probably going to bounce off that. So at a kind of calculated risk, I took a little small position here, right? And then I took a little bit larger position here because I felt that if it hit here, it would bounce off this, and at least I would be, 1 or 2% in the positive, or at least get to the point where I'd get my capital back, right? So here, this one, I didn't take a large one because I wasn't sure if it would really bounce back all the way up, 10 or 11, 12%, right? Even though it historically does. I mean, here it bounced back 11, about a little under, about 10%. So here would have been a little bit of a risk because it only bounced back, bounced back about 10%. So that would have been within the tolerance, right? But that was my thinking, is that, okay, and this is why you kind of have to look, I mean, it's when you look at a full chart and you start looking at this stuff and you start realizing that all you're looking for is where did the sellers or the buyers get punched in the face, and where did they react so hard that the sellers just couldn't handle it anymore and they just won, right? So you're looking always for where did the buyers win? Where did the buyers win? If there's one thing you can remember, where did the buyers win in this chart? Let's look at another chart. Well, let's look at BTC. Where did the buyers win? Here. Buyers kind of won here, but they're having an argument right now, right? So here, right at 82.50, basically for a time, the buyers won. All right. Now they got massively crushed by the sellers for a series of days, as we're experiencing, or a day and 13 hours as we're experiencing right now, as I'm recording this video. But it hit a point where the buyers couldn't take it. Yeah, they couldn't take it anymore. They were just like, hey, you know what? This thing is worth more than 6,600, and for a time it was. And then now they're going to retest it. And I don't like to predict, but my guess is that we're probably going to reach, anywhere from 52 to 56. So the next battle is probably going to happen down here. There's 6 or so, right? So that's really the way to look at this, is like, where did the buyers win? And then how long do you want to be in that trade to see that the buyers are still winning, right? So that's the key. Let's look at another chart just to be clear, and I'll just draw bases. You can start at the 4-hour candles too. This is always smart. Once again, 4-hour candles. If you start at the 4-hour candles, that means that your bases will be stronger. And why is that? Because what you're going to do is you're going to trade off the 1 hour. But if you draw your 4 hours, that's a stronger, because it's got a longer time frame, right? So I'm just drawing these bases. The price where basically it jumped up, right? The buyers, and keep in mind this is moving all the time, so you always got to redraw your bases or rethink about them. So the next base that we're looking for right now just happens to be, look at that. This here, if it crosses this tonight or the next day, I'm going to be buying ENJ. So if it crosses this, because it's reacted, a little bit here, and it look at the buyers, they really react here. This is a great chart to trade. The buyers really do react. I mean, they step up, right? That's what you're looking for. Did the buyers step up? Now let's go to 1 hour candles. And let's scroll in. So you see all the bases we drew on the 4 hours. Of course they stand up because we were trading off 4 hours. And this is where, once again, it's so hard here because of what's happening drastically in Bitcoin. So Bitcoin's drastically going down. These bases are not as meaningful. You have to be very careful about how you look at your bases, right? Because once you could say it broke this base here, but we've been in an uncertainty time that if Bitcoin's not massively bouncing back and doesn't know what it's going to do, the alts aren't going to massively bounce back either, okay? So that's why if we break this base, if I don't see Bitcoin massively rallying, I'm going to be looking to, really just get about 6 to 7% in this trade, the majority of my capital out, and then maybe letting a portion ride up, possibly. or cashing out if it starts to dip and it looks like it's going to get, not, it's going to go against me. So hopefully this is clear. This video is longer than I thought it would be, and I'll probably do another one as I think about better analogies and how to draw these bases. But that's the key with bases. You're just looking for the places where the actual buyers took control of the market. That's what you're looking for. And then if it gets below that price, you're really looking at the chart and you're saying, this chart tells me that every time it gets below some price that the buyers don't like, they react hard. And you like to see the ones where they overreact. The ones that they overreact is always the best to buy, right? So in this market, a lot of the buyers do overreact when something actually looks like it's going to go up and moon. When something looks like it's going to go up and moon, it's people fear missing out. So, most people, this is where you could just be smarter than a lot of investors in this space. Most people will buy as it's going up here, thinking it's going to continue to go up. If you bought here, right here, where it cracked a base and then sold here, you're smarter than most investors, because most investors are going to buy here, or they're going to try to ride the wave up. You need to kind of go against go against the crowd. After you've read a chart and looked at a chart and looked at an asset and said, yeah, the buyers get pissed. When they get punched in the face, they fight back harder, and they win the fight. That's what you're looking for. So that's really the key. Hopefully that's clear. If it's not, just definitely ask in the Discord channel. Subscribe to me on YouTube. Also, I'll put a link to the Discord channel. If you're not subscribed there, definitely subscribe there. And any other questions, just ask.